Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of September 9th, 2013. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was not good news for mortgage rates. Mortgage rates surged higher again last week. If you look at the bond chart on the screen, that's this last 6-month view, you can see mortgage bonds just keep selling off. The trend is for bonds to keep moving lower, which forces home loan rates higher. So if we switch that to the 30-day rate chart, we take a look, we can see Monday, bonds sold off. Tuesday, bonds sold off. Wednesday, bonds sold off. Thursday, big drop, had good economic news, and we're anticipating the jobs report on Friday. Now, if we look at Friday, we did see a recovery on Friday after the jobs report for August came out worse than expected. But we are going to recommend locking your Delaware mortgage rates to start the week. The market is extremely volatile, so it could resume this downward trend and sell off. So if you're closing in the next couple weeks, lock it up. Don't worry about it. Now, if you're not closing for 30 or 60 days, you could float to see if we can mount a recovery off this record low for the bond. But if not, lock it in. Extreme amount of volatility. So let's dig into reports. The big report was Friday's August 2013 labor report released by the U.S. Labor Department, and it was disappointing. It only showed 169,000 jobs created. They were expecting 177,000 jobs, and the labor force participation rate dropped to a 35-year low at 63.2%. Now that measures the number of people 16 years and older eligible for working. They're actually working. That number needs to come up for a healthy labor market. Now, we did see a drop in the unemployment rate from 7.4 to 7.3%. Looks like good news, but no, the drop was mostly for people that actually just dropped out of the workforce. So it was not putting people back to work, dropping the rate. If we dig into the jobs report, they actually revised June and July jobs report to the worst by negative 74,000 jobs. They took 74,000 jobs away from those reports, so the June number dropped to 104,000, the July dropped to 172, and we only created 169 for August. So overall, it was not a good jobs report, but with 169,000 jobs in August, it could be enough fuel for the Feds. They're meeting September 18th to start the tapering program, because they do want to start this thing, but if they start, they may start small, only maybe $10 billion. They're putting out $85 billion right now, so they may only do $10 billion. Or the jobs report may be bad enough to force them to move it out to 2014 to start tapering. Big unknowns, so that's what's going to make the market volatile until we hit that meeting on September 18th. So that's why we, again, reiterating our locking stance because of the market volatility. The next thing we saw was on Thursday. We saw the release of the weekly initial jobless claims. Now that dropped 9,000 claims to 323,000 claims. So that was good news, and that helped fuel that sell-off in the bond market on Thursday. So that's showing less people, new people filing for claims. But there is still 2.96 million people on the unemployment insurance claims. So that's a big number. Need to get that down. In the housing news, CoreLogic reported that the home price index for July 2013 showed a year-over-year increase of 12.4% and rose 1.8% from June to July 2013. The good news is home prices still remain 17.6% below the peak in 2006, so they still have room to the upside, so it's still a great time to get out there and buy a home. 17.6% difference between now and the peak. So you've got some good upside, and CoreLogic expecting 12.3% year-over-year increase for August 2013. So home prices are still moving up. Now, the other news, Fannie Mae released an update, which was not great news for mortgage things. Fannie Mae's new rules for conventional loans effective January 2014. The big one is 97% LTV is gone. The max you can get is 95%. You can have to put down 5% now. No longer just 3%. So that's going to force some people back into the FHA program. If you want to read the whole update, there's a link in the blog. We wrote a whole article on the other factors because there is some other big changes in that update. So in the local news, the next free first-time homebuyer seminar is Saturday, September 14th. That's in Newark, Delaware at the Christiana Hilton Hotel from 10 a.m. to noon. And then the next one in Dover is Saturday, September 28th. That's from 10 a.m. to noon, and that is at the Holiday Inn in Dover. You can register for either event by just calling the office 302-703-0727, or you can register online at www.delawarehomebuyerseminars.com. Look forward to seeing you guys next week.